A good evening, everyone. How are you doing? GameStop's actually still open in the after hours for trading. Wanted to take a look at some of that option flow from today. We'll jump over to that chart real quick just for a second before we jump into that. Look at the daily candle here. What do we got as the close there? High of 28.05, close 27.26. Look at the volume today, though. Nice volume there. 26 mil. Volume Friday, 15.9. Higher move Friday there, which is kind of what people got excited about. We talked about that Friday as we wrapped up during the live. We saw some of those calls come in, about 5 million in net premium. We'll get into all of that in this little video. That way we can take a look at what were those option traders doing with GameStop today. What calls, what puts, what was being bought, what was being sold. We're going to take a look at all of that. But let's flash over with this candle. Take a look at this extended hours. About a half hour left while I'm at the time of recording this. So we look like the high there, 28.75 for the high there in extended hour trading. So I see the sentiment is high. Everyone is excited. The volume on calls today, a little high. The total premium, a little high. The net flow, let's take a look at it. So I post these often when we talk about the net flow. And you'll see these charts. I'm sure you've seen them posted many times across X, not just from my page, other pages as well. So today, total premium, 101 million on GameStop. That's pretty remarkable. In fact, the historical data here on Unusual's platform goes back 30 days. So we'll look at that as well to see how that stacks up. We haven't really seen these levels since this past summer. Net premium today, 6.89 million. So net call premium right here, 7.16 million. So let's take a look as the day progressed in terms of that net call and net put premium. So as price here moved over the 25, I know people were getting excited there from Friday's sentiment. Bitcoin was up. It seemed like there wasn't a stock that wasn't moving. That's kind of the sentiment, was bullish. As we can see quickly there after the open, it just seemed, net call put premium there's, or net put premium semi-flat. And as price start moving up there, getting that 26 level, a little bit of call introduction there, some call buying. Price moved up there, we're around 27 and a quarter, a little bit more. So you can see some of that taper off a little bit, the net call premium. There'll be some people that buy calls here in the morning. Price moves up, they'll sell them, make a few bucks, and they move on. Maybe that's what that little dip there, a little bit of profit taking. Never anything wrong with that. Protect your gains, manage your risk always. And then as we move into the afternoon session, kind of steady there, still some call buying, call selling, and then just kind of moved into the afternoon hours. As we moved up, got up to that highest level, almost 8 million net call premium, settled out around the day at the close at 7.16 on the net call premium. So when you look at like performance wise, year to date, stocks up 55%, over the 1 year, 114%. The past 3 months, 24%. It's not bad when you look at that in terms of the stock. Also today, we talked about that 24 million share volume. Let me zoom this in just a little bit. You're welcome to take a screenshot if you want to use that, pause the video, what have you. Take a look at some of the highest volume contracts today, and we'll break some of these down as well, a little bit of detail. We got the $30 call for this week was the highest volume. And volume isn't just because there's high volume. I'll explain that. It's not necessarily the full representation of what's happening there. If you look over here, we can see it's kind of same. You got similar bid size, similar ask on the volume. So it's kind of split between buyers and sellers. And I'll get into that where somebody could be buy, then sell. Contracts change hands as well. So you have the $25 calls for this week was the next one. 27s for this week. 45s for this week. 26s, 40s, the 28s, the 30s for next week, 40s for next week. Those popped up as well. We'll look at those. 25 puts for this week and 125 calls for January. Those were some of your highest volume contracts, and your highest like open interest where things stand are the 125s for January. The 25 calls for this week are the highest at the 38, 436 open interest, and the 25 calls for January, which are in the money, both of these. $30 calls for this week and 60s for January. Those are like your top ones with the highest open interest. So I post like open interest updates in the morning because they're updated once daily. So all of this information in the video tonight, make sure you look for the post in the morning for the open interest updates so we kind of compare what we're talking about tonight versus what you'll see in the morning when those updates are made available. So we'll take a look at some of like the contracts individually as well. But one thing I wanted to talk about while we mentioned that 101 million total premium today with the 6.8 net premium. Like I said, Friday was near the 5 million net premium at 4.8 and about 52 mil total premium. So the last 2 days, when you think in terms of total premium for GameStop, has actually been relatively high compared to what it's been historically. I mean, let's look at some of the last. We had 26 mil on October 29th, 34 mil, for example, on October 28th, and then something like 6 million on October 17th. So as I scroll historically, I have other data I'd have to relook, but just not right here. Like historically, September 20th, the last option expiry, 47 mil total premium. So it kind of gives you a perspective there. Friday, for example, here's one, September 6th, 55 mil. So kind of a larger day in terms of the total premium, especially today with the 101 mil. So sometimes you'll see me post things like, hey, the hottest contracts or top contracts by premium. So good chance to kind of talk about that together as we look at the hottest contracts by premium today. And that doesn't necessarily mean buying and selling. We'll look at those individually. But we see the $25 call for this week with the highest amount of premium. We're looking at the premium column here, as well as taking a look at the contract here. So we'll zoom it in, let you get the screenshot, or pause it for whatever you need, or if it helps, for the video. The $30 call for this week at 5 million premium. The 27 call this week was 4 million premium. The $20 call for January, 3.7 mil premium, total premium. And the 26 call, November 15th, 3.5. The 25s for January was 2.9. So there's some premium here. 2.5 on the 24s. These are in the money, 26s, 27s at these closed prices. 28s, we saw that high today. If above 28, those would essentially also become in the money, which brings then the idea of 30. We talked Friday about Gamma. You'd been hearing a lot about the $25 price level and the significance. In this video, I'll show you kind of that Gamma where that kind of talked about it. It stemmed around the highest open interest at the 25 strike and the highest net Gamma. So kind of ensure as price moved towards that, you're going to see kind of the influx here. You see some more call buying, you see some more volume, you see some of that upside pressure as the stock moved closer to where some of that open interest at. We'll get into that with a really good graphic here to kind of explain that. But the hedging that goes along, with option dealers, market makers providing liquidity for these option contracts include hedging with common shares. So you'll see sometimes that pressure lift up in the price and the volume when these calls come in and move closer to the money with Gamma. Likewise, on the opposite, as things move away, you could see some of that pressure relieved and the price come down, along with some selling volume. We've kind of talked about that before, kind of some basic plumbing there, like the capital markets in regard to options there. But when we look at some of these contracts here, we want to take a closer look at some of what was the activity. Even though we saw the 7 mil premium on the 25s, let's really take a look at those because that was kind of the hot topic. But as we look at them today, I want you to pay attention to the bid volume, 15,873. Very similar to the ask volume. So when I post something about, the volume is split between the buyers and sellers, that's kind of what I'm talking about. As you have people buying calls because they're excited, you also have people selling calls up here. You also have some people that own the stock and maybe selling calls on the idea they don't think GameStop would go to or stay at 25 by close, and they want to capture some of that premium. For example, say if price moved down, they want to sell calls here and thought the price moves down and volatility moved down, and they'd capture some of that premium. So as you see here, they're kind of split between the bid and the ask, you'll hear. So that's kind of how that's determined, is where the price of that contract was actually filled. Was the price of the contract filled closer to the bid, suggesting a sell? Was it filled closer to the ask, suggesting a purchase, a buy? So when you look at that, the call, people jumped in, people sold, people bought back. You see that often. So when you see the volume, it's not really directional per se. Now, when you look at price action, you would say, okay, we are loading $25 calls, in the morning at 150, but by the end of the afternoon, they were rallying over $300, doubled your money as GameStop was, moving up 27 and touching that 28. So that's a good intraday move there on contracts that expire this week. There's about, like I said, 7 million total premium. And now, mind you, the volume, for example, here's a great way to illustrate that as well. A lot of people saw, hey, there was 40,000 volume on those calls Friday. That's super bullish. Well, if you look of the 40,000 roughly volume Friday, 724 less in the open interest. So those essentially changed hands, buying and selling, profit taking, scalping the premium, which have you. That is what was occurring. So you didn't see much of that show up in open interest. Something that's always kind of important to take a look at, because it could be a lot of buying and selling just back and forth. I buy them here, they move up, I sell them. I buy them back here again, they move up, I sell them. Or I'm selling them up here and buying them back. There's multiple ways to go about it. And that's just, for example, with the 25 dollar calls. So if we're going to look at some of the other ones, for example, in more detail, like the $30 call for this week, similar scenario. These were starting to get alerted on unusual wells and filling about this morning for around $81. And those did move up to around, let's see, some of the fills around 150. So not a bad intraday move. But again, if you note the bid volume, very similar to that ask volume. So yes, there was 53,000 volume today, but not all of it was just like, hey, it's bullish at the ask. This is buying and selling. Now, of that volume we saw Friday of like the 25,000, 6,500 did appear in new open interest today. There was about a 1.4 million total premium last Friday, and about a little over 5 million premium today. See some of that activity there into the close. Some of these larger kind of bid side candles possibly suggest some profit taking there into the close. It's very common, especially on a contract. If the volatility is moving, they're close to expiry. For example, like the implied volatility Friday was 154%, but moved up to 184%. That might alarm someone, and that may trigger them to, capture profits. There's many different trades, occurring with GameStop. I'm just trying to give you like the nuts and bolts, kind of how that's shaping up and taking place there. So again, kind of split, like we talked about what that means, kind of split between buyers and sellers. Always something to consider. Doesn't mean they're not all buyers and changing hands. Doesn't mean they're all sellers and not changing hands. Just something to always pay attention to. The $27 calls for this week. Bid volume 10,802. Ask volume a little bit more, 13,000. Now from that volume Friday of the 7,000, we can see 30,000 appeared new open interest. Push the OI to, you've heard that term, OI, open interest, to 5,486. Now, there was some volume today. That's something we kind of look for, when we're looking at flow, like volume larger than open interest is kind of a larger one. And there was some premium, 600,000 Friday, but 4 million today. So yes, while there was some people selling these calls, there was also some people buying these calls. For example, some of these fills this morning at $100, I think right off the open around 80, and they soared to $225. So not a bad move on something that was out of the money in the morning, and then became in the money towards the afternoon session. So not bad, 4 million total premium there. This is just a good way to kind of break it down for you. So I hope you watch the video through so you can kind of look at some of this. Look at the $20 calls for January. Again, some of that volume today. Now the volume Friday, you can see 2,000. Now we see some of that come out in open interest. Today there was some volume, 4,589. Now there's some premium there, about 5 million total between Friday and today. Now we note the rather larger bid volume, especially these candles compared to the ask. So may suggest some selling there, as the open interest is, let's see, 21,000. So not a lot of volume compared to OI. So we'll check the OI updates tomorrow and take a look how that breaks out. But you can see some of that volume there. So could be somebody selling those. Let's take a look at, make sure, see if maybe someone sold those because they bought something else. That's a very common strategy, whether it be roll or change strikes. So sometimes what we can do is drill into the actual flow, and we can take a look. I was just seeing if maybe there was any like larger multi-leg trades maybe attached to this that would suggest maybe they bought and sold something at the same time, but I did not actually see that one in this particular case. So another one we'll look at, like the 26 call for this week as well. See the bid volume here, very similar again to the ask volume. So something to always look at. Now, some of that volume that was here Friday, did see some of that appear in new open interest. See, had about 1.5 mil total premium Friday and about 3.5 mil total premium today. So again, we'll look at that open interest, see how much of this carries over, see how much of this changed hands. Because some of these contracts, for example, this morning around $100, I think got up to around 250, 260. So not a bad move there on the $26 call for this week as well. And we'll look at one last one before we pull up the gamma. $25 calls for January. Now there was some of that volume Friday. and about 1.4 mil total premium here. Some volume today, a little bit high on the open interest, so you don't really know. Some people could be leaving, coming or going, changing hands, but about 3 million total premium. Again, you couldn't really just say, hey, that's all at the ask they're buying. Hey, it's all at the bid they're selling. It was split again between buyers and sellers, or at least bid and ask volume if you want to suggest it as such. So, but those that, for example, are maybe loading here at, you know, these are, let's see, 504, 463, 500, and then all the way up to near 7. So not bad. Just depends on your risk appetite. There are many people, there's some money there, about 3 mil total premium in and out, depending which way you look at it there. So, and then the $24 calls for this week also saw some activity. 8,000 volume today, about 2.5 mil total premium, 1.2 mil premium on Friday again, kind of close with that bid and the ask. So some people are buying and then selling, taking profits. Some are buying those and keeping them as open interest. So yeah, just the contracts do change hands. That kind of does happen. So OI doesn't always paint the full picture, but it's always very important to look at in that regard. So like I said, when we were talking about like the contracts and the net flow, we talked about that gamma and that $25 level there. So I want to pull up GameStop again so we can get back to that gamma. I posted it earlier on my page, and it'll be linked down below this video in the tweet, so you can check it out. Just more on like the gamma, just a real good explanation with the graphic there. But we'll kind of go over it here as well, as we can see how that shifted as the price. So here was our highest, the strike there was our highest open interest at the 25 strike, followed by the 30 strike. Now, when I did the video Friday and we were talking, we were over here. We were under 25. So now the spot has moved up. And if you look, the Friday during the stream, gamma per 1% price change was nearing like 40 million there. So as the price got moved up closer, essentially what happens here with spot gamma is the assumed dollar value of gamma exposure that market makers need to hedge per 1% change of the underlying stock's price movement. A positive value long gamma, while a negative value is short gamma. And this is what I posted earlier today on my page, and I'll link it down below. So as price got closer, essentially when it was over here to all the open interest, then the gamma was introduced. So that increased some net gamma exposure. It just introduces some more additional upside activity for volume when it comes to the common shares and hedging of the stock. So that was something that we saw there with the gamma, or with that spot gamma. So we actually pull at that gamma here. We look at the exposure by strike. Yeah, I had posted earlier when I talked about that's kind of that 25 level. That's why a lot of people have been talking about, because that's where your highest net gamma was at the 25 strike. And then the 26, and then the 30 is now kind of crept up. It was a little less, but the 25 net gamma. So as like I said last Friday, and then this morning I posted early about this when the stock was still trading at 25. Like, hey, this gets closer to 25, this thing could really get going a little bit. And you saw, went from 25 to 28. A lot of those contracts doubled, if not 150%. So there was definitely actionable alpha within that post this morning. A lot of people have been talking about that level, and it kind of happened, and it moved very quickly. So when you look at like the gamma exposure, like the actual expiry, it's the net gamma's heavy around this Friday, followed by January 17th, and then next week. So depending on this week, obviously that's going to shift the future weeks, depending on how this week plays out. November 15th is what you call, the monthly OPEX. So something to look at there. And then we look at over here, like on the 15th expiry, 4 days. So the call GEX, which we looked at the exposure, 1.3 mil, and then net GEX, and then your normalized GEX. That's why you're seeing a little bit of movement there from Friday into today, is just that additional pressure there. So we look at like daily gamma exposure, another one I had posted as well. This is the assumed gamma exposure the market makers are exposed to. So essentially, they're selling calls, buying puts. They provide the liquidity for these trades. The GEX just assumes that market makers are part of every transaction, and that the bulk of the transactions are buying calls, selling puts to investors, hedging the portfolios. And basically, a market maker has one contract open with a gamma value of 0.05. Then that market maker is exposed to 0.05 times, because each contract represents 100 shares of gamma. So the total market maker exposure is calculated by summing up the exposure values of all of the open contracts determined by the daily open interest. So that's how those figures. So when you see that kind of move up, for example, we look back over the summer, we see when price and gamma is kind of up here in May, really high, and then price came right after it. So even though gamma remained up here, price moved up over the summer again, kind of testing that 28 level, kind of where we're at now, which I'll talk about in the chart as we wrap up. And, gamma up here. And now price moving up. So, like I said, that gamma exposure by strike kind of concentrated net gamma at the 25, which is where we're at. We're closed there above 25. We look at delta, like your delta is the assumed delta exposure. So this is basically a similar concept, how much exposure in that regard. Let's look here. Call delta on the 10, 11, 29 mil, and then net delta 25 mil. So you see, for example, over the summer, price again, delta, calm down, delta down. Now delta moving up again with price. So we look at delta exposure by price, again, targeting, which was already a big one, the net delta around the 20, but now the 25, and now 30 creeping up into play. So you might be seeing people talk, hey, any move closer to 28, 29 sustained or 30, yeah, I mean, then things start opening up above in the option chain as well in that regard. So it's kind of something you always watch price. Did the trend validate or invalidate? Manage your risk. Understand options trading always presents, its own risk in addition to trading. So always manage risk, capital preservation above all. And then delta exposure by expiry. You have net delta highest like here, January 17th. But then again, like I said, the focus on the 15th, what leads up through this week, what trend develops through the rest of this week. Let me take a look here at the charm exposure. There's some really great content on the internet, Unusual Whales, other people on X that really dive into the Greeks, and I highly suggest following them, reaching out, and really learn some of the ins and outs of the Greeks behind the volatility and the meaning, kind of how things stack up behind the scenes. I know it really gets nitty gritty down to like the real granular specifics, but I think kind of a general roundabout way of looking at it kind of really just, adds to your education, adds to understanding things. So you look at like call charm here, for example, put charm flat, but price here, call charm 30, and then again right here 25. So that's charm exposure, and then net charm exposure 30 here, and we're here. So we'll see how this plays out, and then you can take a look here at Vanna as well. Another Greek used by others as well. Important, not as important, it's getting real technical, but something to look at as you just kind of size up price as we're trading over here. Vanna move up, and now Vanna a little higher in the third, at 30. So like I said, as price move up, it's a similar concept. We're over here. If we moved up, boom, you see what happened here. As you got closer to 25, now you saw 27, 28. So that's kind of what happens in that regard. It's kind of the short and sweet. And like I said, you're welcome to look at all of this, pause the video, go back, especially Friday. I'll link that video as well so you can really see like where that gamma was kind of really getting spicy there Friday into the close. But let's see here. We have a few minutes left into the session. I want to just kind of take a peek, what GameStop was doing into like the after hours close here. I did see some of that volume, that 20, we got 27.98, 28.04. Oh, that was, pardon me, into the close. Let me pull up our after hour data. Here we go. 28.75, a little bit of volume there as well. 28.59, not sure what it'll do overnight trading on like Interactive Brokers, Webull trades it, Robinhood, all three traded overnight. I think similar exchanges or use Blue Ocean, or they all, I'm not sure. Don't really do a lot of that overnight, just use it more or less for like screenshots and stuff. But yeah, so that was kind of the move there. I was getting a lot of people excited. I was seeing the sentiment today. It's fun because it reminds me of the summer, the market's up, the election's passed, so I feel like a lot of people are just kind of, just going back to how they were ahead of the election, and they're looking at things. The market's presenting opportunities. I'm seeing a lot of people post incredible gains. So like I said, always manage your risk. It's just very important. Capital preservation above anything else. Should always know what you're doing. You guys are all smarter than me, so I know options trading, all of this stuff isn't out of your league at all. Let's look at some of those like moving averages on the charts. They're kind of blown out. Like the 50-day was, was like a test, and it's just been a sustained 50. We talked about the 920 EMA crossover with volume. Was that bullish? Continued to be validated. Tested that high on October 30th. 2454 really got people excited. Come back down, which we caught back here at the 20-day. EMA. I kind of just use a 9 EMA, a 20 EMA, and a 50 SMA. Volume, I'll use fib levels. They keep it very basic. I feel like price, the only thing we really have is volume to look at and where it's at now. And moving averages let us know where price has been before. Whether or not the statement is true that price has a memory, I feel like about the only thing that's factual we can wrap our heads around is moving averages is established, of a price before. Volume weighted average price establishes a volume level against a certain price. So those things, anything like that, indicators, everything else are, lagging. So nobody really has a magic 8 ball, but you still look for things such as, moving above averages, a nice little bit of consolidation. You have continuation of this 920 EMA. Did it continue? Yeah, with volume. Did it retest a previous moving average? It did. Did it push higher? Yes. Did it try to make a new high? It did. Did it stay above now a new moving average, a 9-day? It did. Now we saw volume Friday and a new high. Extended volume and then extended volume today and a higher high. Nobody knows the trend, but the trend's your friend till it isn't. A lot of hype. You got to watch that implied volatility. Let's take a look at what that actually is today, because I believe that IV did probably juice itself a little bit as we wrap up. So yeah, for example, implied volatility Thursday was 79%. It's starting to get up there, 80% on Wednesday. Friday though, 98%. Today, 136. So definitely be careful. What you might see with the value of a contract can very quickly change, especially with weeklies. I talked about this Friday. I won't bore you with it now. Please go watch that video. I talk a lot about just how to save you some money on those zero DTs, or why they may not be working out for you on the weekly out of the monies, and just some things to talk about, listen to, try it out, get back to me, let me know if it works. I'm genuinely here to watch people grow. I'd rather see you, if you're losing money, I just would rather see you lose less and try to make a little more. That's really all it's about. And if anything, we can talk about together and share ideas together here on X. I think it's a great place for it. I'm all ears. I try to answer everybody in reply, send me a message, what have you. But yeah, that's kind of what I got in a nutshell for today. I want to take one last peek here at the GameStop chart. Let me turn off the after hour data. We'll see what the volume is. We'll see how this continues. I know, I will say this. I've seen the name posted by people that wouldn't normally post it, and I'm not trying to create FOMO. It's already there. I don't have to do that on it. It's already a very hype name. So, but I did see other people posting charts and other, just kind of things, which lets me know they're alerting their people about it. I did see plenty of other Discords and rooms posting about it from like their X accounts, as it attracted a lot of attention at that 25. And that attracts a different type of trader that looks for momentum, that's looking for this, an opportunity in that regard, where contracts move today to make some money. So there's always all kinds of different traders here, but always just trying to show things. So I think with the posts, the videos, it kind of all comes together. But this is just, what we saw today. So hopefully you enjoyed it. Please share it. Check out that video from Friday where I kind of talk about, trying to not protect you on these weekly out of the monies, but I lend some ideas to why they may be going wrong. You can agree or disagree, but I think it's worth listening to, as others said that they appreciate it because it kind of made some sense in that regard. So I hope it does work out. But again, all of you are smarter than me, so I know you've already got it mastered. But this is the video. I do appreciate it, and we'll see what the rest of the week brings. Always take it day by day. Things are validated or invalidated. You look for volume, you look for continuation. Would like to see continued, net flow on the call side in the option chain. So these are things we'll look for, things we'll post. We were pretty quick on it when we saw the calls back in, late April start rolling in May. And then we remember how the summer went. So, I got the flow. We watch it live. I post it often. Yeah, if you want a discount, let me know. I can get you a discount on Unusual Whales. Save you some money too. But you have a good night, and I'll see you bright and early Tuesday morning.